Are you ready for a ride through one of the biggest financial storms to hit the auto industry in decades? Whether you're behind the wheel of your dream car, stuck in the grind of loan payments, or planning your next big purchase, the story unfolding in the U.S. auto market affects you. Right now, used car prices are in free fall, plummeting so fast that nearly 1 in 4 Americans who finance their vehicles are now underwater on their loans. Imagine owing $10,000, or even $15,000, more than your car is worth. It's a harsh reality for millions, and for some, the worst is yet to come. But this isn't just doom and gloom. For buyers, the collapse in car prices presents a rare opportunity. For sellers, it's a high-stakes challenge. And for everyone, it's a wake-up call to understand what's happening and how to protect your wallet. Buckle up, because in this video we're diving into the crash of the century in the U.S. auto market. We'll unpack why it's happening, who's most affected, and, most importantly, what you can do to navigate this wild ride. Whether you're looking to buy, sell, or simply stay ahead of the curve, you've come to the right place. If you own a car, are paying off a car loan, or planning to sell your vehicle in the next few months, it's time to pay very close attention. The U.S. auto market is experiencing an unprecedented shift, with used car prices plunging and a growing number of Americans trapped in what's known as negative equity. This means they owe more on their auto loans than their cars are worth. Currently, a staggering 1 in 4 car owners in the U.S. is underwater on their loans, and the average amount owed beyond the car's value has reached an all-time high of $6,458. What's more alarming is that many Americans are unaware of how this situation could impact their financial stability, especially as auto prices continue to drop. The decline isn't minor either. Experts predict that used car prices could fall by as much as 40% by spring 2025. While this correction will be a relief for buyers who've been priced out of the market, it spells disaster for car owners who financed their vehicles at the peak of pandemic-era pricing. So what's happening? Why is it happening now? And what can you do about it? In this deep dive, we'll explore the root causes of this market shift, its impact on consumers, and practical strategies to navigate the crisis. Stick around, because this information could save you thousands of dollars. The U.S. auto market is undergoing a massive correction. From 2020 to 2022, car prices surged to record levels due to pandemic-related supply chain disruptions. With factory shutdowns and semiconductor shortages delaying production, dealerships faced inventory shortages that left buyers competing for fewer cars. This imbalance drove prices sky high. In fact, from February 2020 to January 2022, used car prices rose by an astonishing 64%, according to data from Manheim, the largest auto auction house in the U.S. During this time, even older used cars were selling for prices that rivaled new vehicles. Fast forward to today, and the landscape has shifted dramatically. As production normalizes, inventories are swelling, leading to a surplus of vehicles on dealership lots. This oversupply is pushing prices down, especially as consumer demand softens due to rising interest rates and economic uncertainty. In October 2024 alone, inventories for new vehicles increased by 2.9%, adding up to 3.14 million unsold units on dealer lots. This marks the second consecutive month of significant inventory growth, forcing dealerships to cut prices to move stock. One of the most troubling consequences of the auto market correction is the rise of negative equity among car owners. When you owe more on your car loan than the vehicle's market value, you're said to be upside down on your loan. Edmunds reports that more than 25% of all trade-ins toward new vehicle purchases now involve negative equity. In some cases, consumers owe tens of thousands of dollars more than their cars are worth. Jessica Caldwell, head of insights at Edmunds, describes this as an alarming trend fueled by pandemic-era overpricing and poor financial decisions. Many buyers stretched their budgets to secure a vehicle during the pandemic, often agreeing to longer loan terms or paying well above MSRP. Now, as the market corrects, these vehicles are depreciating faster than owners can pay off their loans. This problem is compounded by rising interest rates, which have increased the cost of borrowing for auto loans, making it even harder for owners to get out from under their debt. The used car market is bearing the brunt of the correction. Wholesale prices for used vehicles have dropped by 2.3% month over month and are down by 23% compared to their January 2022 peak. To put this into perspective, consider some of the most dramatic examples. A used Tesla Model 3, which sold for an average of $47,375 last year, now sells for about $26,400, a loss of over 40% in value. The Jeep Grand Cherokee has seen its price drop from $41,250 to $39,200, an 8.2% decline since the spring. Popular models like the Toyota Corolla and Subaru Outback have lost 6.8% of their value, now retailing for $19,799 and $27,034 respectively. These are just a few examples of how rapidly the market is changing. And as wholesale prices continue to fall, it's only a matter of time before retail prices follow suit. Several factors are driving the current market dynamics. Inventory growth has surged as supply chain disruptions ease, allowing manufacturers to produce more vehicles. Rising interest rates have made auto loans less affordable, reducing demand for both new and used cars. Economic uncertainty, with fears of a potential recession, has made consumers more cautious about major purchases. Pandemic overpricing, where vehicles purchased at inflated prices are now depreciating rapidly, leaving owners in negative equity. The slowdown in sales is hitting automakers hard. Companies like Stellantis and General Motors have already announced thousands of layoffs as they struggle to adapt to the changing market. For example, Stellantis recently laid off 1,100 workers at its Warren, Michigan plant and offered buyouts to salaried employees to cut costs. General Motors has followed suit, with plans to eliminate an additional 1,000 jobs at its global tech center in Michigan. According to Patrick Anderson, CEO of Anderson Economic Group, these layoffs are a clear sign that the auto industry is bracing for further challenges, including a potential recession. For car buyers, falling prices represent a unique opportunity. With inventories rising and dealerships offering more incentives, now might be the best time to shop for a new or used car if you can secure favorable financing. However, for sellers, the situation is less favorable. Trade-in values are plummeting, leaving many owners with fewer options to offload their vehicles. If you're planning to sell or trade in your car, it's essential to stay informed about market trends and take steps to maximize your vehicle's value. Whether you're buying, selling, or holding onto your car, here are some practical tips to help you navigate the current market. Research your car's value frequently. Use tools like Kelley Blue Book, Edmunds, or CarEdge to track your vehicle's trade-in value. Prices are changing rapidly, so staying informed is crucial. Keep your car in excellent condition. A clean, well-maintained vehicle with up-to-date service records will attract better offers. Consider private sales. Selling privately can often yield a higher price than trading in at a dealership, though it requires more effort. Wait if you can. If you're not in a rush to sell, consider holding onto your car until the market stabilizes. The auto market is in a state of flux, and the coming months will bring both challenges and opportunities. For buyers, falling prices and rising inventories could make it easier to find a good deal. For sellers, it's a more difficult landscape that requires strategic decision-making. As the market continues to evolve, staying informed and proactive will be key. How is the current auto market affecting you? Are you considering buying, selling, or holding on to your vehicle? Let us know in the comments below. Thank you for watching, and don't forget to like, subscribe, and hit the notification bell for more updates on the U.S. auto market. Together, we'll navigate these challenging times and come out ahead.